Hi everyone, this is Jordan here at Pure Elliott Wave, and this week we have a new idea to show some raw charts actually that are charts that Laura and Jack open before they edit anything, because sometimes that direction arrow actually moves exactly where they had laid it the day prior. I'll be showing you recent calls in the gold and S&P 500 markets, and you can see clearly here the day before we had laid our arrow here for the published chart, and this chart is from the 6th of November at 2:11 a.m. and you can see price has swiftly moved along the direction arrow for the S&P 500, moving from a first wave here down to a second wave composed of three waves, which are W, X, and Y, combination moving downwards, with X being a large triangle here. And from the bottom here, we have a break upward of a downward trend line coming down like so, with an invalidation for the second wave not to move beyond the first at 5402.62. Within this new impulse upwards for a third wave, that very short-term invalidation would actually be the low here, around 5,700. So if I were going to be trading this with my own money, I'd be looking for that break of a trend line higher. Usually I'll be looking within this C wave as well for a break of the fourth wave higher upwards, and then I'll put my stop loss below where the Elliott wave count would be invalidated, where any second wave within wave 3 moves beyond the start of that impulse wave down here. So I actually did take this trade from the lows before the election, and definitely one of my biggest trades of the month. You can see on the next chart, which is the same day at 12:56 p.m., we had a large movement upward, which has confirmed the confidence level that we had charted. And at this level, we have rocketed skyward, and over the past week, we've actually been just continuing to climb. So short-term invalidation was put in place, and price moved exactly how the arrow would have predicted it to do so. On the 6th of November at 1:38 p.m., you can actually see we opened the gold chart and we're expecting one more wave down for a third wave down, but it did follow through. Now it's important to note here that while our bullish daily was predicting upward movement, we did have an alternate that had technical support and confidence underneath 2606.69. So this wave count was expecting an A, B, C wave composed of three waves down for wave 2 and a potential third wave thereafter. But with the bearish candlestick patterns and volume, we did kind of know something could be off here if we did break this 2606 level, which is actually what happened if you've been following gold the last few days. So later in the day, we had this bullish daily alternate count also published, which had a confidence level below 2606. And this is where trading with low risk really comes in to help, because I actually did long gold here coming down for A, B, and C, a 5-3-5 structure, and I was looking for a fourth wave to break higher within this C wave, and from there I was looking to jump on for a third wave higher. However, once we broke down that new low after a good 5 wave structures down, I got out and I reassessed the situation and didn't find the market to break another fourth wave higher or any meaningful trend lines. So when we did break this 2606, I knew for sure we were actually going in to the bullish daily alternate wave count, which had some support from technical analysis, classical. So we're now moving from 3 to 4. And if you'd like to see the targets pictured here, you can see that on our website, pureelliottwave.com. But we have our brand new 95% confidence intervals, which are backed by our own statistics and wave counts throughout history. So I hope this really helped everyone understand a little bit of how I trade with Elliott Wave, how you can minimize your risk with Elliott Wave, and how the accuracy of short-term wave count doesn't necessarily mean that the long-term will be the same. It's important to note that our wave counts can change any day depending on what happens. So you always need to be open to the possibilities, something that you learn the hard way as a trader. If you do not open yourselves up to the possibilities and always think that you will be right, you'll be apt to hold a losing trade longer than you should. So I'll see you all next week. This has been Jordan at Pure Elliott Wave. Goodbye.